So a question we get asked all the time is, what is the most tax efficient salary I should be taking in the 26-27 tax year? And the short answer is, it's actually really complicated. There's loads of things to consider. But I think the best thing to do is go through a couple of the best options available. The first option we look at is taking £5,000 per year. And this is a good option for those who really don't like their admin or they've got other income elsewhere. So by taking the £5,000 per year, there's no national insurance, there's no pay as you earn for the employee or the employer. So that's a key benefit. The biggest downside is there is no pension credit tick off if you're just taking that 5,000. So like I say, if you've got other income elsewhere that will top you up to get you towards that state pension, then that's why this is a good option. But the key thing is, as a business owner, if you're one of those who forgets to pay HMRC, well, there's no point being on a higher salary because you're going to have a monthly payment to pay towards HMRC. And if you forget to pay it and you end up paying interest and penalties, then it might actually be tax inefficient because of the additional costs. So this is the simple option. The general consensus on the most tax efficient salary is paying an individual their personal allowance. So you would pay the person £12,570. As an employee, they will have no employee costs to pay. So no pay as you earn and no employee national insurance, but the company will have a national insurance bill to pay. So hence why at 5,000, there's no company national insurance to eliminate the risk of having interest and penalties. This option is the most tax efficient because you're paying yourself £12,570. The company's going to get tax relief on that £12,570 plus tax relief on the employer's national insurance. But like I say, still, there's no employment taxes, so there's a real benefit there. By paying yourself the £12,570, you're comfortably over the state pension credit, so when it comes to ticking off those boxes and qualifying for state pension, when that comes around, you're in a strong position. I'd say there's 4 big factors to consider when looking at this. One is, as you're encroaching £100,000 income, I'd always speaking to an advisor. That's because the benefit of the salary versus dividends is so tight, and you might have other little bits of income or other little bits going on which will really impact it. So it's key to, when you earn around £100,000, to speak to an advisor. The second thing is if you're heavily involved in R&D. So if you're an individual or heavily involved in R&D, the likelihood is there'd be more benefit in you going on a salary because a dividend wouldn't make up part of the R&D tax credit, whilst if you do some employed work on R&D, that's qualifying expenditure, and therefore it will help drive up your R&D tax credits essentially. So if you as a business are involved in R&D work and you as an individual are a key part of that, then again, speak to an advisor because it might not be best to be on that tax efficient salary. The third thing to consider is if you have other employees, that will open up the employment allowance. So if it's not just you in the business, you've got employees, there's going to be an employment allowance available. And that makes the second option we mentioned, the personal allowance, paying yourself that £12,570, even more appealing. The final thing to consider, just from a personal perspective, the fourth point is if you're currently on a salary and you're planning to switch to a tax efficient salary, but you've got a mortgage renewal coming up, or you're looking to buy a new house, I would be speaking to your mortgage advisor from that perspective and say, is this going to impact it? Do I need to continue as I'm going on the salary so I can get my mortgage in place and then consider the switch? So like I mentioned, there's lots of factors to consider. It's no longer straightforward, straight down the line, but by considering all these points, it puts you in a much stronger position when selecting which route you go down.